Hi, this is Jeffrey Kurt Financial Group. Today is Friday, August 28, 2026. So talk about Nvidia's earnings. They were blockbuster, incredible. You can use all the superlatives. And we'll get to some of the detail of that. But I want to spend some time comparing the Nvidia to Dick's Sporting Goods earnings, which were Tuesday morning. Now, as many viewers probably know, Dick's Sporting Goods has a local connection and has started here in Binghamton and like that. And just a great success story as well. But what happened was Dick's Sporting Goods reported earnings Tuesday morning. The stock was down 30% in one day, $55 per share in one day. So what happened? I mean, the numbers were pretty good, but the growth going forward, and there were a bunch of problems with a Foot Locker acquisition. Dick's acquired Foot Locker a year and a half ago, and they've been saying, okay, we're going to build it out. We're going to get the problem straightened out. Well, they didn't. And it's been a real drag and a real disaster. In fact, some of the notes that I've seen is that, the Foot Locker is imploding. There's negative comparisons and all that, and also it's a promotional macro promotional pressures. So again, pressure on the retailers, the discount and like that. Core Dick's earnings and business was still strong, and the FIFA tailwinds, a lot of clothing and stuff bought over the World Cup that we had here too. So again, Dick's made money and but just had bad guidance and having a problem with Foot Locker. We'll come back to this comparison. Nvidia, on the other hand, unstoppable top line momentum and consumer diversification accelerating. They did $96 billion in one quarter, and they're guiding for the third quarter for $108 billion of sales. Now, a couple of negatives on Nvidia are the cash conversion is not being as strong. That revenue is not turning into cash like it was in previous periods. And the astronomical off-balance sheet risk, something I touched upon on Wednesday, is that they are financing some of their customers. The operating cash flow fell 52% sequentially, and extended payment terms for large customers went from 45 days outstanding to 60 days. So a couple of problems there as you look specifically at Nvidia. The market chose to overlook that, and the stock has continued to move up. It's in the 220 area. It was 207 or so before the earnings. Now, the comparison. And what I think it points towards larger risks throughout the markets. Dick's was a favorite, big-time growth story and all that. That growth is for the time being, is ending. And the company was very overvalued compared to some of the things. But again, it was producing growth and accelerating it until Tuesday. And that could happen, I think, that risk is out there for the rest of the market. And you can see other stocks take this thing. Who knows? Nvidia, I'm not suggesting it's going to happen anytime soon, but Nvidia, the way it's priced, has a hiccup in any other metrics. That could be the same type of thing, a down 20% day for Nvidia. We've seen it also in some Facebook Meta, recently that had a big drop too. So the point is, the market and the economy highly leveraged and counting on a successful AI build out without any wrinkles, without any problems. I don't think it's going to happen just as cleanly and as seamlessly as maybe the market's expecting. But I also don't think it's going to happen, any kind of crash or pullback's going to happen right away. But again, I want to point out that these risks are out there. We'll leave it at that. Hopefully have a great weekend. We'll be back on Monday. Thank you again. Goodbye.